I would never suggest not going without general liability at least. There's several policies that are involved with production insurance. To start with would be general liability and auto liability. That's bodily injury or property damage to third parties. For the general liability, it would be you're filming in Times Square and somebody trips over your electrical cords and injures themselves. That would pay for their medical bills, or if they sue you, would pay for defense costs. Same thing with an auto. When your auto hits somebody in the crosswalk, or you have a car accident and you hit somebody else's car, it's going to pay for the damage and the injuries. The meat of the coverages that are there for production is what we call production package policy. And that's all of your production property. So that's where the camera equipment's covered. That's where your prop sets and wardrobe is covered. Your locations, we call third-party property damage. So you're filming at somebody's house and they pull the trucks on the grass and they leave, and now they've got the grass is all torn up. That is a typical third-party property damage claim. Floors being scratched from the equipment being moved around. It also covers what we call your business interruption claims. So for shutdowns. So example, COVID. There's a part of that coverage that is called a civil authority. And so last March at this time, right now, everything was being shut down. There was no COVID exclusions a year ago. So the civil authority claims were all covered claims for productions being shut down. So those are the main type of coverages that are involved. Then that's for filming. And then at the back end, you have your errors and omissions, which is mainly for copyright infringement, libel, defamation, things like that. All production insurance companies are calling it a COVID exclusion, a communicable disease exclusion, or an epidemic pandemic exclusion. So COVID will fall within any of those. So it just depends on the insurance company, but every insurance company that will write film business is putting that exclusion on the policies. Say January of 2020, I would have told a production to budget 1 to 1.5%, depending on what they're doing. So if they've got some heavy stunts or there's some major activity, and depending on what limits of liability, we talked about that bodily injury for liability. If you've got a network involved up front, they could require that you have higher limits of liability. They may want you to have 5 million instead of $1 million. So that increases your premium. That's why I say it's anywhere from 1 to 1.5%. Right now, it's at 2.5%. So it's gone up dramatically. And that's for $1 million or above. Now, when you start going below $1 million, it's a little harder to determine the percentage because you start getting hit with minimum premiums on the policies. So say you're doing a $200,000 low budget feature, it's not going to be a percentage of your budget. It's going to be more than 2 or 2.5% because you're going to be paying minimum premiums for your production packages, minimum premium for your general liability, minimum premium if you need higher limits of liability. But in general, if it's over $1 million, it's about 2 to 2.5% right now. Independent contractors are a tax issue. It's not a workers' comp issue. If you tell a person on what time to show up for their job and what their job duties are, they are an employee with respects to workers' compensation, and you have to buy that coverage. So that definitely is something I talk about on a weekly basis with clients.